Topic 1. Summary, 3 to 4 lines. Headlines cover politics, markets, tech, and geopolitics, highlighting regulatory moves, big corporate investments, and rising tensions. Key financial items include a Trump family-linked crypto firm winning conditional bank charter approval, Berkshire Hathaway adding roughly $17 billion to its Alphabet stake, Nvidia disclosing a roughly $21 billion holding in SpaceX, and investor flows shifting away from cash and long-term bonds into other safety trades. Political and regulatory friction is adding risk across finance, crypto, and media. Details: politics and regulation. The OCC conditionally approved a national trust bank charter for World Liberty Trust Company. The company is sponsored by World Liberty Financial, and its website indicates that an entity linked to President Donald Trump and some family members owns about 38% of the equity. If licensing is completed, the trust bank could issue and operate a stablecoin backed by reserves, U.S. Treasuries and similar, internalizing services currently outsourced to third parties, for example BitGo, and potentially monetizing those operations. Democratic figures, including Senator Elizabeth Warren, strongly oppose the approval because of the Trump-linked ownership. Warren has said she will pursue legislation banning presidents and senior officials from owning banks. The OCC decision is conditional, with additional requirements such as capital increases still outstanding. Markets and investment flows. Berkshire Hathaway sharply increased its Alphabet stake in Q2, holding about 106 million shares after adding roughly $17 billion during the quarter, making Alphabet a top holding in its portfolio. Berkshire's cash holdings decreased slightly to about $365.5 billion. Investors are realizing gains on equities and amid downside risk concerns, shifting funds away from long-term bonds and bank deposits into ultra-short bond funds and money market ETFs. Example inflows. Ultra-short bond ETFs saw about $12.8 billion in July, and money market ETFs recorded cumulative inflows from January through July. Tech and corporate investment. Nvidia disclosed as of the end of Q2 that it holds SpaceX shares, Class A shares totaling $122.8 million, valued at about $1 billion. SpaceX completed a June IPO and has experienced volatility since. SpaceX said it will use Nvidia chips exclusively for its data centers and AI models. Hedge funds and asset managers, for example Tiger Global, are trimming some big tech positions while reallocating into names like AMD and SpaceX. Summary. The headlines are summarized by regulatory moves involving a Trump-linked crypto firm's bank approval, major institutional position changes, Berkshire, Nvidia, hedge funds, and investors' flight to short-duration safe instruments, ultra-short bonds, and money market funds. Political tensions and regulatory issues are creating market and policy risk across finance, crypto, and media, for example, friction between Disney and regulators. Topic 2. Summary. 3 to 4 lines. Ahead of a planned IPO, OpenAI is experiencing a wave of executive departures that is unsettling investors. Several C-suite exits, including the chief revenue officer and chief operating officer, raise concerns about management stability and investor confidence. The company stresses strong growth metrics, but the talent exodus remains a notable pre-IPO risk. Details. Key points. In recent days, high-profile executives have left in succession. Chief Revenue Officer Dennis Dresser abruptly resigned, and just before that, Chief Operating Officer Brad Lightcap departed. Previously, figures such as Piggy Simo had left or taken leave. This C-suite instability comes as OpenAI submitted IPO paperwork privately in June and prepares for a public offering, with a valuation implied around $852 billion, increasing investor skepticism about the company's plans. Investors view the talent departures as a red flag. Concerns are amplified by competition. Google, Anthropic, the spread of